Hi, I'm Saddam Hussein here. I welcome you to CBSE Board Economics. This year, they're giving more emphasis on objective type questions. So we'll be putting many objective type question videos. Keep watching them. It will really help you. Objective type questions are not difficult because most of these questions have multiple answers, or you are supposed to write a word or a sentence or true or false, which is pretty simple. But you have to have a comprehensive knowledge about the subject, otherwise you won't be able to attempt. Let's see, today we'll give you some objective type questions. When we discuss these questions, maybe 2, 3, but we'll give you the background knowledge behind it so that it will help you to identify your answers. Let's start. The first question goes like this: which of the following is a flow? Before I go to this question, let's recollect our past knowledge. When we started national income accounting, we discussed the difference between stocks and flows. Let's revise once again what exactly some of the variables in economics are stock, some of the variables are flow. What exactly is a stock? Stock is a quantity measured at a point of time. Stock is a quantity measured at a point of time. Point of time may be at 12 o'clock, maybe at 10 o'clock, maybe today. That's a stock concept. We gave you many examples of stock. So some examples we take. National wealth is a stock. So you can measure the national income, national wealth of the country at any particular point of time, as on today. National capital is stock. What is the capital? As on today. So these are the stock concepts. How you can say your wealth is stock, or the money you have in the bank at any particular day. That is a stock concept. Water in the reservoir today at 10 o'clock is a stock concept. Water in your tank, maybe water tank, maybe at 6 o'clock in the evening, that is a stock concept. Water in the reservoir, water in the tank, amount of money in the bank at any given point of time, national capital, national wealth are stock concepts which we discussed. That means stocks have no time dimension. That means stocks have no time dimension. It means 1 week, 1 month, 1 year, 1 decade, no time dimension at a particular point of time. What exactly is a flow? Flow is a concept which is measured over a period of time. These variables apply only when you refer to some particular time. So we'll take the same example. Instead of national wealth or national capital, if you say national income, it is a flow concept because national income is always measured in 1 year. The first Jan to 31st of December, or 1st April to 31st of March, 1 financial year, 1 accounting year, national income. Your dad's income is also a flow measured at over a period of time. The deposits in the bank in a month's time or in a year, that is a flow concept. Saving is a flow concept, how much you save in a year. Investment is a flow concept. Capital formation, how much you invest in 1 year. So most of the variables in economics are flow variables, very few are stock variables. So flows have time dimension, stock does not have time dimension. Flows influence stock, stock influence flow. So this is the difference between stocks and flow. Stock is a quantity measured at a point of time. Flow is a quantity measured over a period of time. Stock has no time dimension and flow has time dimension. Stocks influence flow. Flows also influence stock. So examples we discussed. Now let's see now with this knowledge, which of the following is a flow? We discuss all of them. Deposits in a bank. Deposits in a bank means at a particular point of time. So deposits in a bank at a particular point of time, this is a stock concept. Capital is a stock. How much capital you have at any particular point of time, that is also a stock concept. Depreciation, you measure it over a period of 1 year. Depreciation, you can't measure it at a point of time. You can't say how much is depreciation at 10 o'clock in the morning, how much is depreciation at 6 o'clock in the evening. You have to measure it over a period of time. So that is a flow concept. wealth of a person or wealth of the country is a stock concept. So in this case, deposits is in the bank is a, so if it had been how much deposits you have done in 1 year, that's a flow concept. Just deposits in a bank is a stock concept, capital is a stock concept, depreciation is a flow concept, wealth is a stock concept. I hope it's pretty clear. You don't have to write all this, just write in this case which of the following is a flow. You just write depreciation is a flow concept because it is measured over a period of time, maybe a year. Let's go to the next one. Which of the following is indirect tax? This also we discussed earlier. Now let's recollect once again, it will help you. Direct taxes and indirect. In the economy, some of the taxes we discussed in budget chapter also are direct and some of the taxes are indirect under tax revenue receipts of the government. What are the direct taxes? Direct taxes which we directly pay to the government, in which the tax liability and the burden, incidence of the tax, we call it on the same person. Income tax is a direct tax, wealth tax is a direct tax, property tax is a direct tax, corporation tax is a direct tax, in which the tax liability and burden is on the same person. Which are the indirect taxes? In the case of indirect taxes, the tax liability and burden is on different people. For example, now earlier there used to be a lot many indirect taxes, but now we have just one indirect taxes, that is GST, goods and services tax. In this case, the tax liability is one, but the burden can be passed on to others. They put the GST on the shopkeeper, he'll pass it on to the consumers. We discussed the difference also. You cannot escape direct taxes, but you can escape indirect taxes by not consuming the commodities. Direct taxes are progressive. That means as your income increases, your tax rate also increases. Indirect taxes are regressive. It means everyone has to pay the same percentage or amount of tax, whether you are rich or poor. That's we discussed in detail. You don't have to write all this here. Which of the following is indirect taxes? They're asking you, will analytically think all this. Corporation tax. This is a direct tax because when they put the tax on big corporations like maybe Reliance, so the tax burden is on the Reliance company and the Reliance cannot pass it on to anyone. The tax liability and burden is on Reliance. So this is a direct tax. GST, goods and services tax, that is the only indirect tax we have. So this is an indirect tax. In this case, the tax liability and burden is on different people. Wealth tax, I just told you, is a direct tax because liability and burden is on the same person. Income tax, I just told you, is a direct tax because the tax liability and burden is on the same person. So there is just one indirect tax, that is goods and services tax. This type of questions come, I keep on adding more and more to my videos, and I give you the we analytically discuss it and we give the background knowledge, and it will really help you. It will be a kind of refresher and kind of recollecting your memory or refreshing your memory. Thank you for watching the video. Till we meet next time, it's goodbye from Saddam Hussein. Keep smiling. Bye-bye.